So now that you understand some of the factors that can impact your financial forecasting and budgeting for your cannabis business, I want to talk about a few ways on how you can actually improve your forecasting efforts. First and foremost, you have to model out multiple scenarios. Now, it's very, very easy to feel optimistic when you start to forecast your business's performance. You're like, oh, we're going to make so much money and have not so many costs, and we're going to have so much profit. But it's also easy to be extremely conservative as not to get your hopes up too high and they come crashing down when you don't hit your projections. We call that sandbagging your numbers, right? You just say, oh, we're going to make just a little bit of money. Then when you exceed expectations, you guys go crazy, you're excited and happy. That may have a big impact on how you see your forecast for the next years. At any rate, to be honest, neither way is wrong in how to forecast, but you should at least model out both of those scenarios, one that's very optimistic and one that's a bit more cautious. This is especially true if there's uncertainty surrounding major factors that could impact your industry or your business, which is very, very prevalent in cannabis. Things such as government regulations. Yep, that's big in cannabis and licensing and things of that nature. New competition or new licenses. Yes, that is a factor in cannabis. So you have to have a conservative estimate. Again, if they're going to drop in 25 more licenses on a 40 license area, that means licenses are going up over 50%. What is that going to do to your business? As well as looking at things like overall economic growth. Right now, we're in a very uncertain time. So what does it look like to have 40% less revenue? Can we at least cover our fixed expenses on that? And as the year plays out, you can see where you land on your spectrum of financial performance and financial forecasting. And when you get the Q1 and Q2 data, you can make your future forecasts more accurate for the balance of the year. Just understand, model out the two scenarios. An optimistic, we're going to go gangbusters and make a lot of money, but also what is our more cautious example of, all right, we're going to at least cover our fixed expenses and break even and have a little bit of growth or have a little bit of profit. Looking at both those scenarios, and then you can true it up as time goes on. Now, a second way to improve your financial forecasting is to start with your expenses. Now, in most cases, expenses are significantly easier to predict than revenues. But yes, there is a correlation. So we're going to start with our fixed expenses. Things like rent, insurance, licensing costs, things like that. Now, after you figure those out, then you're going to have to work in your variable expenses. Things like utilities, cost of goods sold, labor. Now, to make that as accurate as possible, you'll need to have a relatively detailed cost breakdown of your products. You need to know your true cost per pound or your true cost per gram of oil. Now, if you're a retailer, you also need to understand the inventory costs in salary and wages. But how do you do that, right? The corollary to understanding those two is that how do these variable costs relate to revenue? So this will help you determine your revenue numbers as you forecast. Let's give an example here. Say if you purchase $50,000 in product per month as a retailer, how much revenue can you generate? Okay, maybe you're going to generate $100,000 in revenue. Now you need to ask the question, how many people will need to be employed to handle that type of transaction volume at my retail location? Now you need to look at, okay, well, I have 3 registers, I'm open for 10 hours a day, and I can have blah, blah, blah. And you look at all these little factors to create a model of we need 9 people to work because they can only work 35 hours or 40 hours. I don't want to pay overtime, so I want to have more people to jump around and plug and play, right? There's lots of different factors in how these all relate to each other. But we start with expenses, then that drives up to how much revenue can we drive, which then a jump of a back and forth between expenses and revenue, and you add in additional factors. But again, you typically start with those fixed expenses, then dive into creating a methodology to predict out the rest. An example of this in real life is for cultivation. You know how much rent you're going to have and you know the size of your grow space, right? These fixed expenses and fixed spaces, which means you can predict how many grams per square feet you can actually produce, which will then drive the amount of revenue generated for that entire space. That's just a quick back of the envelope to understand, once you have those numbers, is this a viable forecast? Is this even a viable business? Or what needs to change to make this a positive ROI, right? Once you have those numbers, you say, all right, well, here's what utility costs are going to be. Here's what some other expenses such as labor and payroll taxes and things of that nature are going to be. So understand, start with expenses, that builds into revenue, it kicks back to expenses, and you do this kind of back and forth until you can create that full budget. Another way to improve your financial forecast is to find comparable businesses to compare your forecast to. And to assess the accuracy of this financial forecast, you have to look at people within your industry as well as within your certain location, right? Cannabis businesses in Illinois and certain parts of Illinois, they differ from each other, right? People in downtown Chicago are different than people that are out in the middle of Peoria, Illinois. It's only 2 cities I know, but at any rate, they're going to perform different. They're going to have different things. So you need to, if you're a downtown metropolitan location, all right, how do other downtown businesses look compared to mine? Now, with cannabis, most companies are private. And if you do end up finding a public company to look at, you're probably going to see consolidated financials. They're not going to break down each dispensary for their business, which makes this comparables difficult. But that's where you can leverage working with Green Growth CPAs. We've done budgeting and forecasting for hundreds of cannabis businesses and clients of ours, and we understand if your financial plan is on base or if it needs to be adjusted, right? No forecast, no matter who does it, is going to be 100% right. But if it's in a good general direction with an acceptable margin of fluctuation or error, then you're on the right path to say, all right, this is the benchmark. Let's go execute against it and see where we land. And the last way to improve your forecasting, and we've hit on this a little bit here and there, but it's that you need to constantly reevaluate your financial model that creates your forecast and your budget. This is where the reporting aspect of your financials comes into play. With Green Growth CPAs, we have the CFO service where we actually are the CFO for businesses. Let them focus on creating great products and running a great operation. We report back to the business owners and the managers, and they can improve their forecast for the coming months or quarters or years. Understand that your financial models should not be static. You have to have some type of living document to change how things kick out at the end. Now you'll see what growth rates are, how marketing campaigns impacted the business, what true costs of products are, and the inputs for other products, and that gives you clarity on your actual performance. And further, input assumptions, expense percentages, revenues, all these other internal, external factors start to settle as your fiscal year progresses. So it's less about guessing and more about truing up your model to the actual performance and state of your business, essentially improving your guidance for the balance of the year. So look at past performance, make changes in your model to reflect this new and most accurate information so that you can have a better budget and forecast for your coming months. And by having better guidance in your financials, this helps you make smarter, strategic decisions for your cannabis business. For example, maybe you start to see that demand is just significantly higher than what you were predicting for your retail location. And you're starting to see this very early on in the first quarter, second quarter of the business. And you understand seasonality of your business. And you know that you're in the low portion of your business here, the low season. It's going to be high season coming up soon. Now you see that, and you may have the opportunity to purchase a grow operation or to lock in certain costs for product, because you're going to be funding maybe somebody's grow operation. Looking at and truing up your model, you can say, all right, this is a good decision because it gives us consistent supply at a fixed cost, and we know what we can expect for months down the road, and we'll have enough supply when the season picks up. Or because we're doing so well, we're just going to have a consistent supply. We don't have to stress about where we're going to find the next batch of cannabis for our clients. That is the power of reporting and budgeting and financial analysis for your cannabis business. Making these strategic decisions, these managerial accounting evaluations of the business to understand what should you do to future-proof your business, to grow your business, to find ways to improve the operations of your business and the financial health of your business. Now, hopefully this presentation has brought you some value and helped you to understand the importance, again, of financial forecasting and budgeting for your cannabis business. Now, if you need help with forecasting or budgeting, please reach out to us via our website at greengrowthcpas.com or give us a call at 800-674-9050. We've helped hundreds of cannabis businesses with their financial forecasting, their budgeting, pro forma financial statements for their licensing application, or for when they're actually going to go do some fundraising, things of that nature. We understand how the numbers all come together for all different verticals in the cannabis industry. So if you need help with forecasting or budgeting for your cannabis-based business, no matter the age of the business, if it's a new business or if it's been around for a few years, please reach out to Green Growth CPAs via our website at greengrowthcpas.com or give us a call at 800-674-9050. Have a great day, and we'll talk to you soon. I need to let you know that the information contained in this presentation is for guidance purposes only and not as professional legal or tax advice. And further, it does not give any personalized legal, tax, investment, or any business advice in general.